Hello, welcome to the weekly technical analysis review for Monday, July the 8th. I'm Fibonacci at XM.com, and the pairs we're going to look at for this week are the Euro Yen, the Pound Dollar, and the Kiwi Dollar. We're going to start first with the Euro Yen pair. We can see that the near-term bias is bearish. The momentum indicators are in negative territory. The stochastics, though, looking at the percentage K and the percentage D lines, we do have a bullish crossover. So there is some upside momentum. Prices at the moment are hovering just above that shallow uptrend line that we've got in place. But if we do see prices slipping below that uptrend line, that would reinforce the bearish picture in the medium term. It could also lead to prices breaching below that 5-month low of 120.78 we saw back in May, and then that would shift the focus increasingly to the key psychological 120 handle. But if we do see the positive momentum gaining traction, there's likely to be resistance initially at around 122. So that's near both the 20-day moving average as well as the Kijun Sen line of the Ichimoku cloud. Higher up, we've got another potential resistance around 122.50. So that's where the 50-day moving average currently is. Overcoming that as well would then allow Euro Yen to head inside the Ichimoku cloud, and that would help shift the current bearish outlook to more neutral one. However, we would really need to see prices breaking above the top of the cloud around 123.80 if we were to see a return to more positive picture in the medium term. Let's now turn to pound dollar. Again, it's looking bearish in the short term, and again from the stochastics we can see that there is some positive momentum because of that bullish crossover between percentage K, percentage D lines. However, prices are struggling at the moment just above the 1.25 handle, so that's the key resistance, key support level that's helping support prices at the moment. Breaching that support would we could then see prices slipping towards 123.6% Fibonacci extension of that outlet from 1.2505 to 1.2783. So the 123.6 Fibonacci is at 1.2440. Below that, we've got 1.2390 as another important support, the 138.2% Fibonacci extension. But the main support to the downside, if we were to see a sharp sell-off in pound dollar, is the 161.8% Fibonacci extension at 1.2333. But if we were to see a reversal in price action, initial resistance should come at the 78.6% Fibonacci at 1.2564. Clearing that could then help pound dollar recover towards the 20-day moving average near the 50% Fibonacci at 1.2644. That would help ease the downside pressure. But if we were to see a sustained uptrend, though, in the pair, prices will need to break above the June top of 1.2783. In the medium term, though, pound dollar remains very much stuck in a bearish phase. And finally, let's now turn to Kiwi dollar. It's a bit of a mixed picture because looking at the MACD, it's still comfortably above zero, though it is now slipped just below the red signal line. Looking at the stochastics, though, they're trending downwards, pointing to continued deterioration in the positive momentum. Price action, though, today is higher. There is resistance coming from the 38.2% Fibonacci of the up leg from 0.6487 to 0.6725, so that's around 0.6634. Above that, we've got a 23.6% Fibonacci at 0.6669. Clearing that resistance would help Kiwi dollar make to challenge the June top of 0.6725. If it does manage to do that, that would potentially signal the start of a new longer-term uptrend. At the moment, though, prices could potentially slip below the 50% Fibonacci at 0.6606. So that's a very important support level at the moment. It's also near the 20-day moving average. So if we do see a further deterioration in the near-term bias, that breach is possible, and then we could then see prices heading towards that descending trend line. If Kiwi dollar breaks below the descending trend line and also at the same time below the 50-day moving average, it would risk shifting the medium-term picture from the current neutral one to a bearish one, and then prices would then would be at risk of heading towards the lows, the recent lows. First we had that 7-month low of 0.6481 and then 0.6487. We had seen a decent recovery in the outlook, returning to a neutral one, but now we can see everything is very much at play, and the bearish forces are still very much present. So that's it from me. Thank you very much for watching, and have a great day.